Hi, I'm Shadow. My strategy focus is mainly on price action, market structure, and key support and resistance level. I usually begin my analysis from the higher time frame first, then refine my entries on the lower time frame. This actually helps me mark out high probability setups, especially when trading markets like gold, USDJPY, or other major pairs. So we are on the USDJPY pair and currently on the 4-hour time frame. We will start analyzing from the price action of last week. And as I earlier said, I trade key support and resistance zone. What we can see here is price revisiting this key support zone right here. We forget about what happened, whatever is going on here. We're just going to concentrate from here, the price action of last week. And what we are seeing currently is price revisiting this key support zone right here. So what do I do in cases like this? When visiting key support or resistance zones, I always wait to see what is happening next, if it's going to break out or trying to retrace back. How do I get confirmations for that? Let's see. After price visits this zone, it starts consolidating. That is not sure yet if it wants to sell or if it wants to buy. It's still consolidating, and it's actually good because within a consolidating period, once it breaks out either to the upside or to the downside, that's when we get full confirmation of its intended direction. So I'm just going to mark out this zone clearly so that we can see what happens next. So I've just marked out the consolidating zone right here. As you can see, price ranging within this zone. So we just wait for a breakout either to the upside or to the downside. Let me switch down to the lower time frame so we see what happens next. As we can see, after price consolidated for a while, it actually took a direction and broke above this consolidating range to the upside. After a breakout, I always wait for a retest. Yes, I'm always going to wait for a retest before taking an entry. And for a retest, to get a key point for its retracement, I use the Fibonacci tool. Start marking it out from this low to the recent high before the retracement. So using the Fibonacci tool, starting from the low to the recent high it went before starting to retrace back, we see that it actually falls within a fair value gap right here, and the Fibonacci gives it more confluences because it's actually on a 50% basis. Based on past experience, high probability is that after retracing back to the 50% basis, it takes its intended direction. So if I was to take a trade right there, this is what my trade was going to look like. Entry would be right here on the 50% basis, just tapping into that fair value gap. Right here, and the stop loss is just going to be right below the order block after the fair value gap, and the target will be the most recent high there, and it was going to be an easy 1:2, I think 1:2, an easy 1:2. So if I'm to take a trade right here after the breakout of the consolidation range, I use the Fibonacci tool to get a precise entry point on the 1-hour time frame, waiting for it to hit the 50% basis. And more confluence to that is the fair value gap we have right here on this point, the fair value gap we have right here. So I just take the entry right on the 50% basis point and the stop loss directly below the order block after the fair value gap, targeting the most recent high. And that's just it. For the next entry, since it's confirmed that we are in an uptrend, what I'll be looking for is more buy positions. So after marking out the range and broke out of the range, using the Fibonacci to mark out our entry from the 50% basis, we have a nice 1:2 risk to reward trade, and that's just it. And to get along, since we are in an uptrend, all I'll be looking for is buy positions. Yeah, I'll just be looking for buy positions, and since we already have our first point right here and we have our next point right here, which was confirmed by the Fibonacci retracement tool, we can now use a trend line to link these 2 points so that we can have the second entry. Beginning from here, we have the first
So after confirming the first and the second point, we can now use a trend line to get another entry. As you can see, we just wait for price to retest our trend line here. And to get more confidence, actually I don't even need any more confidences on this because it's been confirmed already. This already looks like a double bottom to me, and for a double bottom, price obviously is going to get up here. So I just need a confirmation for me to enter in order to get right up here, right here. So what we have here is the tap on this trend line. So if I'm going to enter a position there, this is what it's going to look like. I'm going to tap right there just as it taps on the trend line and directly below this low, directly below this low. So because this actually already filled up this fair value gap already, and there's no other block left here to be mitigated. So I'm just going to enter directly as it taps on this trend line and set my SL just below this low. And yet again, I target the most recent high, which is right here, and that gives us a nice 1:4 trade on that. Following the trend line again to get more positions on this, we wait for it to tap again on the trend line, which it actually did here, but it broke out. So if I was actually supposed to take a trade on this one, we won't take a loss. Why? Because price actually just did a fake out, not actually a change of structure. It just broke the trend line, but the structure still remains. Why? Because this recent low is being protected, and as we can see here, we actually do have, and as we can see here, we actually do have a fair value gap right here and an order block which price is looking forward to mitigate, and that's what it just did right here. As you can see here, price just mitigated this fair value gap. So actually, if I was to take a trade here, my stop loss will be directly below this other block, which is directly under the fair value gap. So it was going to look like this. Entry. Targeting the most recent high. So if I was to take a trade on the next touch, my entry is obviously going to be immediately price taps on the trend line, because I strongly believe this is an uptrend, because you are still looking to mitigate this high right here. So immediately price taps on the trend line, I was obviously going to take an entry right there, and my stop loss directly below this other block right here. As we see, that would give us a 1:2, which is not a fair risk to reward, but still worth it because it's still a profitable one. So that's just how I get my buy trades from this setup, a setup like this. After getting the second touch here, confirming from the Fibonacci retracement after the break of this range, means it confirms that this is the first. So we can now plot out our trend line and start trading from there. And as I said earlier, from the higher time frame, I was expecting this to be a double bottom, which it actually played out to be. And as we see, price has actually filled out all of the entry spots. So what we do is the same thing. We just wait and see what price has to do, if it's going to break out and continue buying, or if it's going to um change its direction from an uptrend to a downtrend. So currently we don't do anything at this point. And another thing with trend lines, in order for it to be more accurate, is that whenever we have a trend line like this and we have a breakout like the one we have right here, we should always adjust it right there to look like that. So right now, after this fake out again, we are going to adjust that right there. So what we are waiting for is either price coming to test this trend line here, bounce on the trend line and keep buying, but I'm not going to do anything. I'm not going to trade that even if price gets here. Why? Because we are at a key resistance zone, so I'm not going to do anything at this point, even if price gets here, because I'm actually anticipating that price is going to do something like this upon the market open, something like this, coming down to break the testing zone. Why do I say so? Is because if this is actually a double bottom as I anticipated it to be, then we should have a retracement back to its neckline, then keep buying. But if this is just going to be a consolidating market on the higher time frame, then we are going to have something like this back to this support zone, and again we start looking for buy trades when it gets here, or when it gets here we rather wait to see what happens. If we are confirmed to take buys, then we go again. But from here I'm just going to wait and do nothing else till I get confirmation that we are breaking to the upside or we are retracing back downwards. Hello, I'm back again. So it's been a week since the last analysis, and I'm here to show you all how it played out during the week. So let's hop on the charts. Alright, so last week we are all about price retesting this key support zone right here and breaking out of this consolidative period, giving us a swing, a nice uptrend swing above. And since we visited the highs already, I said I wasn't going to do anything at that point because I was expecting price to break out, which it actually did. Retesting this neckline right here. Let me put the line on that so that we can see clearly. Retesting this neckline right here, which it just did, and we've had a retracement back up here. So I'm expecting a move like this upon the market open. We've already had that breakout and the retest, so I'm expecting to see something like this pull back, and then we have a nice downtrend all the way back down to this key support zone right here. So that's just it, all about the strategy. Very nice, simple and easy to comprehend. No complicated indicators on the screen, just simple price action, trend line and key support and resistance zone. So there we have it.